A potential seismic shift in the cryptocurrency market is on the horizon. The U.S. government is poised to advance a landmark Bitcoin and crypto market structure bill this month, which could redefine the future of digital currencies. Here's everything we know about today's developments. On May 4th, 2026, the White House confirmed that a significant Bitcoin and cryptocurrency market structure bill is likely to be advanced this month, a move that could have profound implications for the digital currency landscape. The announcement came from Patrick Witt, the top crypto advisor to President Donald Trump, who stated that legislative action could take place within the first half of May 2026. This bill is anticipated to unlock a staggering $6.2 trillion in potential market value, drawing the attention of investors and traders alike. The news has sent ripples through the cryptocurrency community, igniting optimism among market participants. The bill aims to provide a clearer regulatory framework for cryptocurrencies, which have long been viewed as a gray area in financial markets. Historically, the lack of regulatory clarity has stifled innovation and hindered mainstream adoption of digital assets. Previous attempts at regulation faced significant pushback and stalled in Congress, often due to concerns about overreach and the potential stifling of technological advancement. However, this initiative appears to have strong backing from the White House, signaling a shift in the administration's approach to digital assets. The urgency of this legislation is underscored by President Trump's vocal support, as he has urged lawmakers to prioritize the passage of the bill. This proactive stance is noteworthy, especially given the growing concerns around market stability and investor protection. With increasing incidents of fraud and market manipulation in the cryptocurrency space, the proposed regulations could help foster a safer environment for investors. The report suggests that this new regulatory framework could pave the way for major institutional investments in cryptocurrencies, which have been hesitant due to regulatory ambiguity. As the bill progresses, it could significantly reshape the investment landscape, encouraging more traditional financial institutions to enter the cryptocurrency market. This development stands apart from earlier legislative efforts as it combines robust governmental backing with a clear vision for the future of cryptocurrency regulation. Looking ahead, the successful passage of this bill could mark a turning point in the integration of cryptocurrencies into the broader financial system, potentially leading to a more stable and mature market. The proposed legislation surrounding the Bitcoin and crypto market structure is poised to revolutionize the landscape of digital currencies. If enacted, this bill aims to provide much-needed clarity and stability to an industry that has frequently been plagued by regulatory ambiguity and volatility. The cryptocurrency market, currently valued at approximately $2 trillion, has experienced significant fluctuations, with prices swinging wildly based on market sentiment and regulatory news. The anticipation of this bill could act as a catalyst for substantial investment growth, particularly among institutional investors who have been hesitant due to the lack of a clear framework. This legislation could potentially inject billions into the market, facilitating a more robust financial ecosystem. The bill addresses several critical issues that have long hindered the cryptocurrency sector, including market manipulation, fraud, and consumer protection. These challenges have not only eroded investor confidence, but have also tarnished the reputation of digital currencies in the eyes of the public and regulators. By establishing a robust regulatory framework, this legislation could create a safer environment for both retail and institutional investors, fostering trust and encouraging participation. For the average consumer, the passage of this bill could mean greater confidence in cryptocurrencies as viable options for everyday transactions and long-term investments. The potential for mainstream adoption hinges on regulatory clarity, and this legislation may serve as the bridge needed to connect traditional finance with the burgeoning crypto ecosystem. The impact on the financial landscape could be profound, as cryptocurrencies gain acceptance as a legitimate asset class alongside stocks and bonds. This shift could enable traditional financial institutions to offer crypto-related services, further integrating digital currencies into everyday financial practices. Looking ahead, The successful implementation of this legislation could usher in an era of unprecedented growth for the cryptocurrency sector. As more investors enter the market, we may witness the development of innovative financial products and services that leverage blockchain technology. This evolution could not only enhance the functionality of digital currencies, but also solidify their place in the global economy. With the right regulatory framework in place, the future of cryptocurrencies appears promising, potentially reshaping our financial systems in ways we have yet to fully comprehend. The path to today's announcement has been shaped by years of uncertainty and regulatory challenges in the cryptocurrency market. Since Bitcoin's inception in 2009, the industry has faced scrutiny from regulators worldwide, fueled by concerns about money laundering, fraud, and consumer protection. Over the past few years, numerous attempts have been made to establish a comprehensive regulatory framework, but these efforts have often stalled in Congress due to partisan divides and differing views on cryptocurrency's role in the economy. In 2021, the Securities and Exchange Commission adopted a more aggressive stance towards crypto exchanges and initial coin offerings, prompting calls for clearer regulations to protect investors. The growing popularity of cryptocurrencies has led to an influx of retail investors, raising concerns about market volatility and the potential for fraud. High-profile incidents of hacking and scams have further intensified calls for regulation. This heightened scrutiny culminated in increased lobbying efforts from industry stakeholders who have urged lawmakers to create a balanced regulatory environment that encourages innovation while safeguarding consumers. The Trump administration's recent shift in attitude towards cryptocurrencies indicates a recognition of their potential impact on the economy, suggesting a willingness to embrace this emerging sector. The proposed bill reflects a compromise between regulatory oversight and innovation, aiming to create a framework that fosters growth while protecting investors. This historical context is crucial to understanding the significance of today's announcement, as it marks a potential turning point in the relationship between the government and the cryptocurrency industry. Looking ahead, the success of this regulatory framework could determine the future landscape of digital currencies in the United States, influencing investment strategies and possibly setting a precedent for global regulatory practices. The next few months will be pivotal in shaping how this evolving sector interacts with the traditional financial system. As the proposed Bitcoin and crypto market structure bill gains traction, several scenarios could unfold in the coming weeks. This legislation aims to provide a comprehensive regulatory framework for cryptocurrencies, a sector that has long operated in a gray area of financial oversight. The bill has garnered attention from both proponents, who argue for the need for clarity, and critics who caution against overregulation. If the legislation successfully passes through Congress, it could usher in a new era for the cryptocurrency market. A clear regulatory environment may entice institutional investors who have been hesitant to enter a market characterized by uncertainty and risk. This influx of institutional capital would likely lead to a surge in demand for digital assets, with some analysts predicting that Bitcoin could soar to unprecedented levels, potentially reaching targets of up to $90,000 as market confidence stabilizes. Conversely, if the bill encounters significant opposition and fails to clear legislative hurdles, the repercussions could be severe. A defeat in Congress may trigger renewed volatility and uncertainty, resulting in a sharp decline in investor confidence. This could lead to a sell-off, impacting not only Bitcoin, but the entire cryptocurrency market, which has already experienced significant fluctuations in recent months. Experts are closely monitoring the legislative process, anticipating a robust and possibly contentious debate surrounding the bill's provisions, which include taxation and consumer protections. The stakes are high, as the outcome of this legislation could define the future of cryptocurrency regulation in the United States. Stakeholders, including investors, developers, and exchanges, are advised to keep a vigilant watch on upcoming congressional sessions. Key votes during these sessions could ultimately determine the fate of this landmark legislation. With regulatory clarity on the line, the cryptocurrency landscape may evolve into a more stable, institutional-friendly environment or remain fraught with uncertainty. The coming weeks will be critical in shaping the role of digital currencies in the global financial system. As we anticipate the implications of this proposed legislation, what do you think will happen next for the cryptocurrency market? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives.